Just wanted to welcome everybody here. Want to start off by thank you all for joining me here today. Make sure I'm on. Okay, good. Just want to thank everybody for being here. And I know that these are uncertain times, and we've got a lot of folks listening in and people who will join us later afterwards as we put this online. And I know that we're trying to help you to address all the different issues that are out there. I just want you to know that I personally and my whole office is working morning, noon, and night to help people address all kinds of different issues. This particular session is designed to help you with consumer finance issues. We're trying to answer as many questions as we can. We've got a great person here to help us with it. A lot of you have submitted questions, and so we've taken those into account. I want to let you know that that if you have questions outside the scope of this, so we've had a lot of unemployment questions. The Texas Workforce Commission has been working. They've been absolutely overloaded, and my office has stepped in to help out. That is actually a state agency, but we're helping with federal resources just because it's just such an important issue for so many people. And if you have questions beyond this, or if this session did not answer your questions, I want to let you know that we're here, my office, Van Taylor's office, I'm Van Taylor, I'm the congressman, we're here to help you. You can reach out to my office, 972-202-4150 with your questions. I highly recommend that once you've listened to this, we haven't answered your question, go to our website. And if that doesn't work, we're going to give you contact information during this. Email us, call us directly. We're happy to help you. We have been updating our website literally every single day as new information comes in, because we want you to have the latest and greatest information to address the various issues that come through. And we will try to get you the very best answers we can and help you to solve your problem, whatever it may be. And so with that in mind, that we're here to help. We're here to help you personally. We're here to help your family, help your business. And let me also just remind, we're sending regular emails with updates. So if you don't want to check the website all the time, you want to go check regular emails. You can go to my website, VanTaylor.house.gov, and we've got we have special updates there for seniors, for veterans, for families, for workers, and then for businesses. So sign up for any of those that you think are applicable to you. And we'll email you the latest and greatest, or of course you can just go to our website and you can check it out there. So we have Mr. Wegner from the Consumer Finance Protection Bureau. Ted Wegner is a policy analyst for the CFPB, or Consumer Financial Protection Bureau, since 2016. In the Consumer Education and Engagement Division, he's responsible for reviewing consumer-facing content as an expert on a range of different issues, including student loans, credit cards, fraud scams, and many others. And we're really lucky to have him here, and we really appreciate you taking the time to be on this. And again, we're here to serve you however we can. And this is actually our third webinar on a variety of different issues. We're happy to have you here. And with that, Ted, would you like to introduce yourself, and you can take over the show.
All right. I hope everyone can hear me now. Thank you so much, Congressman Taylor, for the introduction and for the invitation to join you here today. It goes without saying that this pandemic has brought numerous challenges to millions of Americans. And that's why I'm pleased to be here with you all today to share some of the resources my colleagues at the Consumer Financial Protection Bureau have put together to help Americans protect their finances during this difficult time. The CFPB has a statutory charge to educate and empower consumers to make better informed financial decisions. And the Consumer Education and Engagement Division, where I work, carries out that charge. And we have been busy creating many resources to help consumers navigate the financial challenges that many are facing due to the coronavirus. My goal here today is to provide you all with an overview of these resources and to answer some of the questions that you may have. In many cases, I might not have the specific answer to your question, but I will certainly do my best to provide you with resources where you can find more information, possibly the answer, And as the Congressman alluded to, I know his staff is happy to help you track down answers to many questions as well. So with that, I think we can go to slide 2 on my deck, which is the disclaimer deck slide. Get that up. So general disclaimer, Bureau employees have to give when we present is this presentation is being made by a CFPB representative on behalf of the Bureau. It does not constitute legal interpretation, guidance, or advice of the CFPB. All the opinions or views stated by me, the presenter, are my own and may not represent the Bureau's views. We can go to slide 3 now. It's important that consumers protect and manage their finances during this pandemic. The CFPB, as I've mentioned, is committed to providing consumers with current information and the resources to help them as the pandemic situation evolves. The CFPB and other financial regulators have encouraged financial institutions to work with their customers to meet their community needs. You can find CFPB's guidance addressing the coronavirus for financial institutions specifically on our website, but I want you to know today's presentation will focus on the resources available to consumers. And we can go to slide 4. We have created a central hub on consumerfinance.gov, that's the CFPB's website, with resources for consumers to help them protect and manage their finances. These resources are available in English and many are also available in Spanish, and I know we're adding other languages as well. Also included in these resources are financial resources from other government agencies. So if it's not something necessarily in the CFPB's purview, we have a long list of helpful information that may help you track down the information we're looking for. I'm going to be referring back to this page a lot throughout this presentation, but I want you to know this hub, this landing page is updated regularly. I would say mostly daily. It's updated daily. So it's important to check back for updates. As I'm sure you've all learned, this is such a fluid situation and things change, and we want to get information out to you that is applicable up to the minute. So our website is the best place to do that even after our talk today. We can go to slide 5. The timing of this webinar is quite good, actually, because just this week, the Bureau teamed up with the Department of Housing and Urban Development and the Federal Home Finance Agency to create a central hub for information on housing, all things housing. This website is a one-stop shop for consumers to find accurate information about relief options available to them during the pandemic. You can find this website at consumerfinance.gov/housing. You can also find it by simply going to our homepage. It's prominently linked to. And then I know after this, if any of you have trouble finding the resources I discuss online, please let Congressman Taylor's office know, and I'd be happy to get in touch with you and make sure we're sending you to the right place. We go to slide 6. On our landing page that I've discussed, some of the topics include current information about how consumers can financially protect themselves, including credit and debt management, student loan repayment, mortgage relief options, scams to be on the lookout for, online and mobile banking tips, a guide to COVID-19 economic stimulus relief, the economic impact payments from the IRS, many of you might be familiar with, and a whole host of other topics that are constantly being added to, as I mentioned before. On the page, we also link to our videos that we've produced. Early on, we produced a video about how homeowners can obtain mortgage forbearance if their finances are impacted during the pandemic. We'll talk about that at length in a little bit. And as always, consumers who have a problem with a financial product or service can use the CFPB's complaint submission process to help connect them with the company that they're having trouble with. And that information is linked to on the main page as well. But today, we are going to discuss a few financial areas affecting many consumers during the pandemic. I will highlight various options consumers have, both previously existing options before the pandemic, and new options you may qualify for under the recently passed federal law called the Coronavirus Aid, Relief, and Economic Security, or CARES Act, and I'll call it the CARES Act throughout the rest of this presentation, but just know that that's what I'm referring to. We'll talk about specifically mortgage and student loan payment options that the CARES Act have provided, as well as ways to deal with debt and protect your credit, and also some other troubleshooting resources if you need more help. We can go to slide 7 now. Just wanted to add a quick plug for our social media resources. A very good way to stay up to date with us is through following our materials through Facebook or Twitter. We've also been creating several coronavirus related videos and posting them on our YouTube channel, and we have more videos to come. So whether you're following us by just following along in the main page or our social media resources, we encourage you to use all of the above. Okay, let's get into the meat of it by going to the next slide. Thank you. So the advice I'm about to give holds generally across most consumer finance products, and we'll go over some of the special cases, but this is sort of general guidance that we hope is helpful at this time. If you're having trouble paying your bills or your loans, you're having trouble paying them on time, there may be a number of options to help. If you're not able to pay your bills, check with the service provider website to see if they have information that can help you. A reoccurring theme throughout this presentation will be that service provider phone lines are often tied up during this time because there's so many consumers looking for help. So we've really been encouraging consumers to check online with the service provider to see if that is a viable option to provide help that way instead of having to wait to get someone on the phone. The CFPB and other financial regulators, again, have encouraged financial institutions to work with their customers to meet their community needs in this very difficult time. Credit card companies, lenders, and other financial service providers may well be able to offer you a number of options that can help in your situation. This could include waiving certain fees like ATM, overdrafts, or late fees, or it may allow you to delay, adjust, or even skip some payments. Before you get in touch with your service providers, we're telling consumers that they should be prepared to explain the following things before they get on the phone or talk to someone online from the company. Be prepared to talk about your financial and employment situation, how much you can afford to pay at this present moment, when you're likely to be able to restart regular payments, and also be prepared to discuss your income, expenses, and assets. And then perhaps most importantly, explain that you are experiencing financial hardship due to the COVID-19 emergency. Okay, we can go to the next slide. I'm going to talk a bit now. I'm going to give a general overview about the CARES Act mortgage relief options. Everything I'm about to discuss is covered in way more depth on our new housing hub that I just discussed before. And so I just wanted to note, I think you can see on the slide, there's a very helpful navigation menu that you can click right to the situations that may be most applicable to you. So I found that to be a pretty helpful guide. And note at the bottom, we have a page for renters as well that we've recently put up. Okay, next slide, please. So for many homeowners with mortgages, there is help, but it's important to first assess your situation. We're telling consumers, if you can pay your mortgage, then you absolutely should. There's no reason to stop paying your mortgage during this time if you are able to. Don't call your mortgage servicer if you're not facing an immediate issue. As I've discussed, mortgage servicers are getting tons of calls right now, and they need to prioritize those who aren't able to pay their mortgage at present. So if you have a question with your servicer that's not necessarily, I need help covering my payment, go to their website and see if they have options there first before you try to get on the phone line. If you can't pay your mortgage or can only pay a portion, it's important to contact your mortgage servicer immediately. Again, it may take a while to get on the phone. So either try on the phone or look online to see if there's a more immediate help option. The CARES Act puts in place two important protections for homeowners if your mortgage is a federally backed mortgage. First, your lender or loan servicer may not foreclose on you for 60 days after March 18th, 2020. Specifically, the Act prohibits lenders and servicers from beginning a judicial or non-judicial foreclosure against you, or from finalizing a foreclosure judgment or sale during this period of time. You'll notice 60 days after March 18th is about to expire, but I encourage you to check back on our Housing Hub for more up-to-date information after that period ends, and also to check with resources from your state. There may be state provisions that apply and can help you with this particular situation if you're facing foreclosure. Second, if you experience financial hardship due to the coronavirus pandemic and you have a federally backed mortgage, you have a right to request a forbearance for up to 180 days, and then the possibility of another 180 days after the first forbearance period ends. So let's go to the next slide and talk a little bit about forbearance. What is a mortgage forbearance? Well, forbearance is when your mortgage servicer or lender allows you to temporarily pay your mortgage at a lower payment or possibly even pause paying your mortgage. Now, it's critical to note you will have to pay back the payment reduction or the pause payments later. These payments don't go away simply because you're in forbearance. Forbearance is meant to help you deal with a hardship, such as if your home was damaged in a flood, or you had an illness or injury that increased your healthcare costs, or if you lost your job. So many people are facing scenarios just like that because of the pandemic right now. Again, foreclosure does not erase the amounts you owe on your mortgage. You'll have to repay any missed or reduced payments. It's important to point out forbearance is complicated. It's very complicated. There's not a one size fits all because the options depend on many factors and the type of mortgage you have. How you repay the amount you missed during forbearance will also depend on the type of mortgage you have. But I do want to say this, generally speaking, if you have a federally or GSE backed mortgage, you should not have to pay back the missed payments all at once when the forbearance period is over. But it's still crucial to ask your servicer what your options are for paying back the missed payment once forbearance ends. Our Housing Hub and site walks through the payment options that may be, the repayment options that may be available to you depending on the different type of government-backed mortgage you have. There are many different types, and there are going to be different options depending on what you have. So also check back frequently on our Housing Hub because there may be new developments or information to share, especially coming from these government agencies that back mortgages. Okay, let's go to the next slide. What options do you qualify for? This is to help you determine if you do qualify for any of these. Again, your relief options are going to depend on who owns or backs your mortgage. So here are the first steps to take. First, it's important to find out who services your mortgage. This is who you need to contact to talk about a forbearance. Your mortgage servicer is the company that you send your mortgage payments to each month. And if you don't know or can't remember who currently services your mortgage, there are several ways to find out. The best way being to look at your mortgage statement for the contact information for your servicer. Second, to find out if your mortgage is federally backed, once you've identified your servicer. Again, to be eligible for the protections under the CARES Act, your mortgage must be federally owned or otherwise backed by one of the federal agencies like HUD, the U.S. Department of Agriculture, the FHA, Veteran Affairs, Fannie Mae, or Freddie Mac. And I just want to say there's a strong likelihood your mortgage is federally backed. It won't apply to everybody, but a large percentage of mortgages in the United States are federally backed. If you don't know who owns or backs your mortgage, or you're trying to find out if it is federally backed, call your servicer or possibly find out online. The servicer has an obligation to provide you, to the best of its knowledge, who owns your loan. So if you've found your servicer, you've identified that your mortgage is federally backed, call your servicer and let them know about your situation immediately if you need help with payments. Ask them what forbearance or hardship options may be available. Again, I want to go over the CARES Act provisions. If you are experiencing financial hardship because of the pandemic, you have a right to request forbearance for up to 180 days. And then you will have the right to request an extension for up to another 180 days after that. But you must contact your mortgage servicer to request this forbearance. Nothing will be done automatically for you. There will be no additional fees, penalties, or additional interest beyond the scheduled amounts that will be added to your account during the forbearance period. And the good thing is you do not need to submit additional documentation to qualify for CARES Act forbearance other than your claim to have a pandemic-related financial hardship. So there's not necessarily an arduous process for proving hardship. They should take your word for it if you are experiencing hardship because of the pandemic. If your mortgage is not federally backed, and I think we got a few questions on this ahead of time, you may still have relief options through your mortgage servicer or from your state. It's crucial that you contact your servicer and let them know about your situation and that you're having trouble making payments during the pandemic. I just know informally we've heard that many mortgage companies and servicers who serve as non-federally backed mortgages are offering some form of forbearance. So it's crucial that you reach out to see what your options are. Okay, that was the section on CARES Act mortgage forbearance. We're going to turn now to student loan repayment under the CARES Act. If you're having trouble paying your student loans, good news is you do have options. Student loan borrowers now have more benefits to consider when planning for the potential financial impact from the pandemic through the CARES Act. So here's what it is. If your loan is held by the federal government, your loan payments, which is the principal and interest, are automatically postponed with no interest until September 30th, 2020. Borrowers with loans held by the federal government do not need to take any action to suspend payments. So you may have, if you have federally held loans, you may have gotten a note from your servicer saying that they're being suspended until September 30th, 2020. So the good news on this one, don't need to do anything if you have a federally held student loan. The suspension of payments, though, only applies to student loans that are held by the federal government, but those are the vast majority of student loans issued since 2010. Again, interest will not accrue on your federally held loans while your payments are suspended. These suspended payments will count towards any student loan forgiveness program or other forgiveness programs, as long as all of the other requirements of the loan forgiveness program are met. So for the other types of student loans you might be wondering about, such as a federal student loan held by a commercial lender, or possibly it's a loan that the institution you attended gave out, or perhaps it's a private student loan held by a bank or credit union or the school, these CARES Act benefits are not going to apply. But if that's the case, it's still very important to contact your student loan servicer to find out what your options are. With many of these that might not be federally held loans, but federally backed loans that a institution holds, you should be able to request a forbearance for a federal loan that's held by a private lender by calling your servicer or going online to the website. If you have lost income as a result of the pandemic, your servicer can help you determine if enrolling in an income-based repayment plan is an option for you. Under these types of plans, your monthly payment could be as low as $0. So you're probably getting the message. It's crucial to go check in with your servicer to see what your options are. In addition, emergency forbearances are available for most private education loans. We've been hearing most private lenders are offering some type of forbearance. So crucial to get in touch with them to see what your options are. And then quick plug for our FAQs and our coronavirus landing page on student loans. We have a great series of questions that walks you through all these scenarios and can help you figure out what type of loan you have and what's going to be applicable to you. Okay, next slide, please. We're going to talk a little bit about protecting your credit during this time. Your credit reports and scores play an important role in your future financial opportunities. You can hopefully use the tips I'm about to give to help you manage and protect your credit during the pandemic. So the advice we always give, no matter what's happening, is it's important to get a copy of your credit report and to be frequently checking your credit reports. You can get copies of these at annualcreditreport.com. Each of the 3 nationwide credit reporting agencies, so that's Equifax, TransUnion, and Experian, allow you to get your report for free once every 12 months. However, I am pleased to report that recently the 3 nationwide credit reporting agencies mentioned above have announced that you can get free weekly reports from all of them through April 2021. You can find more information about that at annualcreditreport.com. But it really just shows that you're going to have an opportunity to check your credit reports for free for the next year on a weekly basis, which is a great thing to be able to do, especially if you're worried about your financial situation. Again, if you can't make payments, it's crucial to contact your lenders to explain your situation. Many have announced proactive measures to help borrowers impacted by COVID-19. Just like with natural disasters and emergencies, your lenders may be willing to provide forbearance, loan extensions, a reduction in interest rates, or other flexibilities for repayment. Now, there are some credit reporting provisions under the CARES Act that I'd like to briefly overview with you guys today. The CARES Act places special requirements on companies that report your payment information to the credit reporting companies. These requirements apply if you are affected by the pandemic and your creditor makes an agreement, which is called an accommodation in the CARES Act language. If your creditor makes an agreement or accommodation with you to defer your payment, make partial payments, forbear a delinquency, modify a loan, or provide other relief. So how your creditors will report your account to the reporting companies under the CARES Act depends on if you are currently or already delinquent when the agreement with them is made. So this gets a little wonky and it's perhaps easier to follow along on the website, but I just quickly want to go over, say you've made an accommodation with your creditor, and if your account is current and you make an agreement for a partial payment, to skip a payment or other accommodation, then the creditor is supposed to report to credit reporting companies that you are current on your loan or account, even though you've agreed to one of these modifications. But this applies only if you are already meeting the terms of the agreement. If the account was delinquent when you made the agreement or the accommodation, then your account will maintain that status during the agreement until you can bring the account current. So unfortunately, if you have delinquent accounts, the CARES Act protections can't necessarily cure that. And then if your account is already delinquent and you make an agreement, but you bring your account current during the course of the agreement, the creditor must report that you are current on your loan or account. So again, kind of hard to walk through at a general level, but our website has great resources on this that you can follow along with. Our website also covers the effective date for these provisions. I won't get into that now, but there's more information on that as well. A few additional things to know on credit reporting. Again, routinely check your reports. If you're working with lenders on payment assistance programs or forbearance, it's important to routinely check credit reports to make sure they're accurate and reflect the agreements you made. For example, if your lender agreed to let you skip 1 month's payment, make sure that they didn't go report that as a delinquent or missed payment. That's the type of things we're talking about when you go look at your credit reports. You want to make sure it's accurate and reflects the agreements you made. If you find that information in your credit reports is inaccurate, the CFPB has a step-by-step guide to dispute that information that you can find on our website. And you dispute that information with the credit reporting agency and the company that provided that to them, which is known as the furnisher. If the investigation doesn't resolve your dispute with the credit reporting company, you can ask that a brief statement of the dispute be included in your file or included and summarized in future reports. One other option is you can also submit a complaint to the CFPB at consumerfinance.gov/complaint. It's also very easy to find on our website. Okay, next slide. So dealing with debt, we know, can be a very stressful experience. Coupling that with this pandemic may make it even harder to address. So as you plan for the potential economic impact that you're facing because of the coronavirus, there are a number of steps that you can take to help manage debt in these difficult times. I'm not going to get too far in the weeds on our debt resources on this slide because I want to keep going with my other slides and open it up for questions, but I want to highlight a few main things. If you currently have a debt in collections, you can work with collectors to identify a realistic repayment plan. We have a lot of resources that help you contact and negotiate with debt collection companies, including form letters and the right language to use. And I will also say, if you already were in a debt repayment plan before the pandemic, you may be able to modify that agreement, especially if you're not able to keep going with that agreement you had ahead of time. So just know that you can do that. There are a number of rights you have, thanks to a federal law called the Fair Debt Collection Practices Act. I'm not going to get into those, but you can find all of those at our website, and things to be looking out for as you deal with debt collection companies. And again, we have lots of sample letters and the terms and things you need to be thinking about when you're negotiating with a debt settlement company. We can go to the next slide. All right, well, we've covered a lot of material in a short time. I just want to point out it's really important to take notes when you're talking to any lender, servicer, or debt collection agency. For any agreement you make, ask to be provided with written documentation that confirms the details of your agreement. Agreements can be extremely complicated, so it's important to make sure you're familiar with all the final terms that you agreed upon. And again, if possible, it's important to ask for a written record of that agreement. Okay, next slide. I wanted to outline a few of the additional places you can turn to help, especially if the information that I've provided today doesn't quite get to the question you may have, or you have other questions that may arise in the future. There are a couple other places you should consider. HUD-approved housing counselors are a fantastic resource. They can discuss options with you if you're having trouble paying your mortgage loan or if you have a reverse mortgage. They can also help you figure out the ins and outs of a forbearance program or modified payment program. And they can also help with rent if you're having renters issues. So that information, how to find a housing counselor, is available at our website. I'm happy to provide information on that if you have trouble finding it. But I just want to highlight how great of resources they can be. Credit counselors, reputable credit counseling organizations are generally nonprofit, and they can advise you on your money and debt and help you with a budget. Some might also help you negotiate with creditors. We have information on the questions to ask before you find one of these agencies on our website. And lastly, lawyers. There may be situations where you simply need a lawyer to help you sort through the issues you're dealing with. And we have information on that on our website. There may be resources to assist you through your local bar association or legal aid, or if you're a service member. So we have resources on how to find a lawyer, and I'm happy to pass those along too if anyone needs those. And then finally, I will conclude by saying, if you have a problem with a financial product or service, even during this time, try reaching out to the companies first. They can usually answer questions unique to your situation and more specific to the products and services they offer. But the CFPB can help connect you with this company if you do have a complaint. We help consumers connect with financial companies to understand issues, to fix errors, to get them direct responses about problems. And when you submit a complaint, we, the CFPB, work to get you a response. And most companies can respond to you within 15 days. So I've said this before, you can submit a complaint online through us, but consumerfinance.gov/complaint. The company may contact you directly to confirm information provided in your complaint before it actually responds to you. In some cases, the company will let you know their response is in progress and will provide a final response within 60 days. The message here, our complaint system is still up and running. We're still taking many complaints, and it can be a very useful resource for you. With that, I think I can finally turn it over to questions, and I know there might be plenty. So thank you very much for listening to my presentation. I'm happy to take a few questions at this point.
Thank you, Ted. So this is Anna with Congressman Taylor's office. That was a great presentation. Like we've discussed, we had folks who submitted their questions before the event, and we've also had folks submit some questions during the event. So what I'm going to do now is read through some of the questions we've received, and Ted, give you the opportunity to answer them or just provide a little bit more information for those participating today. Before we get started, I did want to remind everyone that some of the information, a lot of the information covered today is frequently changing. So please make sure that you visit Congressman Taylor's website at VanTaylor.house.gov/coronavirus alerts. And that'll be available on the next slide too. So you can write it down. No worries about trying to get it right now. But Congressman Taylor is sending out information very regularly with updates as things change. You know, whether it's different time periods or extensions on different programs. like you've mentioned several times, Ted, things are constantly changing and there's new programs and new resources. So make sure that you reach out to our office so that you can get those updates. The next thing that I just wanted to kind of remind everyone is that Ted, today has gone over items at the federal level through CFPB. And he's mentioned this as well, but there are programs and services and resources at both the state and local level too that are available. So again, reach out to Congressman Taylor's office. The office phone number is 972-202-4150 or at VanTaylor.house.gov so that we can give you more information on some of those state and local programs as well. All right, our first question is, what is mortgage forbearance? You've obviously gone over this. And how does it work? What are the different options in forbearance and what rights do consumers have? You have touched upon this, Ted, but if you want to just maybe summarize one more time, that would be great.
Yeah, gladly. Mortgage forbearance, in short, allows you to temporarily make less than your normal payment or potentially stop your mortgage payment altogether. And it's meant for temporary hardships and to assist to help you stay current and stay in your home. And so I just encourage everyone to go to our housing hub, linked to from our webpage, consumerfinance.gov. There's just a ton of resources on all things forbearance. And you're able to find out, it walks you through how you find out who your servicer is, who potentially backs your mortgage. And then once you have that information, on our website, we walk you through what the potential repayment options are going to be, because they really do differ depending on who backs your mortgage.
Thank you. The next question is, how should a lender seek assistance for dealing with an unethical student loan lender?
Yeah, so I was talking about our complaint process. We do take complaints on student loan servicers. So if you are having a problem with a student loan lender or servicer, I highly encourage you to submit a complaint at the Bureau's website, and we can help to get a response from the company.
Again, you already covered forbearance, but should folks reach out to their lender when requesting forbearance? Should that be done online? Should that be on the phone? What's the best way to do that?
Yeah, it's going to depend on the servicer. We just know that the call volumes are extremely high. So you should be able to call your servicer. That shouldn't be a problem, but it's possible your servicer offers options to contact them online, which may be faster and may get you a response faster. So just be flexible and try to see what your servicer provides, but definitely you should be able to call.
If I apply for mortgage forbearance now, will that impact an individual's ability to get another mortgage in the future?
So the general answer to that is no, it shouldn't, because of the CARES Act credit reporting provisions that require lenders to report your loan as current to the credit reporting agencies on your loan, of course, assuming if you were current before the forbearance began. But I just want to point out that's a very general answer, because your credit score will depend on many factors, not just the mortgage forbearance you got or your mortgage payments. So it's crucial to check your credit frequently to make sure that your credit reports are accurate. But if the question is simply if I apply for a forbearance and was current ahead of time, that forbearance should mean that your loan is being reported as current to credit reporting agencies. And so the hopes being there that it is not a ding on your credit report.
The next question is from an individual who's currently receiving Social Security benefits. If they're facing debt because of the COVID pandemic, can their benefits from Social Security be garnished?
So again, general answer here, likely not. Social Security payments are usually exempt from collection and garnishment, except for some specific types of government debt, like if you owe back taxes, if you owe on student loans, or if you have child support payments that you haven't made. But Social Security payments are generally exempt from garnishment. And we have more information about that on our website as well, if you want to dig into that a little more.
Can you repeat the website where folks can check their credit score for free? And then also, this individual says that, you know, usually checking your credit score too frequently actually impacts your credit. And I think your recommendation was to check it frequently right now. Will that bring their credit score down?
So I should be clear here. What I am suggesting is you can check your credit reports for free, not your credit score. Your credit score is a different model that is based on your credit reports that many different companies use. But your credit reports are sort of the basis that the modelers use to create your credit score. And the credit reports are where you can find out information with how your lenders are reporting if you're current or not on your debts. And so the website where you can go do that, I want to make sure I get it exactly right for you. annualcreditreport.com. Sorry for the delay there. If you're checking your credit reports through annualcreditreport.com, that should not impact your scores. But I do want to note, scores are a different thing, and you may be able to get a free score through your credit card or other financial service provider. But what I'm talking about are your credit reports.
Great, thank you. 1 second. My company was evicted from their commercial lease by their landlord, and they're not able to pay rent as a result of COVID. Will that impact that individual's federal or personal credit report, or where can they get more information to kind of figure out how that would impact their own credit?
Yeah, so without knowing more information on that, that's going to be a little tricky to answer. But I will say it's going to be very important for this person to be checking their credit reports to see how or if that is being reported on their personal credit reports. You can go to consumerfinance.gov and look at the webpage on credit scores and reports. We have a lot of information there, and you'll be able to find out more, especially about specialty reporters like companies that report lease and rent agreements. So a little hard to answer in the abstract, but definitely check your credit reports and definitely go to our website to learn more information on the things you can be doing.
The next question is about student loans. The individual says, should I continue to pay on my repayment plan if my loan is in default?
I don't think I'm going to be able to provide individualized advice on that one, but I encourage you to go check out our student loan page. And you might be able to get more specific guidance from the Department of Education on that.
And I'll just reiterate too, if people have specific questions about their very specific situations that might not be appropriate for the group webinar, please give our office a call. Congressman Taylor has a lot of information that he's put together and a lot of issue specific resource guides, so covering whether it's student loans, mortgages, rent assistance, the list goes on and on. So definitely reach out to our office. I'll say our phone number again one more time, but to contact our office by phone, it's 972-202-4150. The next question is addressing, and you've spoke about this a little bit earlier, that generally speaking, there will not be a lump sum payment at the end of a period of forbearance when dealing with a federally backed mortgage. This individual says that their lender isn't providing any reassurance of what the repayment plan would be. The lender says they'll discuss with me after the forbearance period is over. What if they make me provide a lump sum? Is there anything I can do now to rectify the situation and possibly avoid an issue down the road?
Yeah, that's a good question. My advice on this one is to simply be persistent with your servicer. Check back in with them often on what the repayment plan will be. Keep asking the question. These things have been very fluid, depending on the servicer, and they're learning more every day. So don't give up. Keep asking them the question. I will also say you may want to go to our site to help determine that the FHA does in fact back your mortgage, because different agencies have differing policies on forbearance and what the repayment plans are going to look like. So again, our housing hub found on our website can help you sort through that information and to get a sense of what the repayment plan is going to look like. But to the initial question, be persistent. Keep asking.
All right, our next question is going to be our last question for this event. Before we do it, I just want to remind everyone, reach out to us, reach out to Congressman Taylor so that we can get you answers to your specific questions. But the next question is, do some repayment options affect you differently than others?
So potentially, it depends if we're talking about forbearance repayment options. Again, it's going to depend on your who backs your mortgage and the different type of policies they're going to provide. And so I guess the answer there is it sort of depends, but our website hopefully will be able to walk you through all the different types of repayment programs, even if it's not for a mortgage forbearance, and the things to be considering. And if you don't find what you need, please reach out to Congressman Taylor's office, and I can try to get you some more help as well.
Thank you so much, Ted. We really appreciate
Thank you.
Joining us today. And I think Congressman Taylor is actually hopping back on the call right now to just give a few more kind of closing remarks.
Sure. Thank you, Ted, so much. Really appreciated you giving all this information to us here today. It certainly is helpful to everybody. And just want to say thank you for your willingness to step up and help and answer further, deeper questions. And just, I want to reiterate that my office is here to help answer questions as well. Some things that do not fall under the CFPB jurisdiction: property taxes, economic impact payments, that's more in the IRS department, in the Texas Workforce Commission, so unemployment issues. But again, my office is here to help with those particular issues, and we get you in front of the right people and help get your answers. And I know that generally speaking, the problems that are coming to our office are the more difficult, thorny problems that require us to get hands-on and kind of figure out more. We are updating our website on a regular basis. I mean, pretty much daily with the latest information. We have alerts that we're sending out over the internet. So if you want us to email alerts to you, you can go to VanTaylor.house.gov and click at the top, and there's a coronavirus alert. You can sign up for those. We will have this online in a couple days so that people can review it. And feel free to tell your friends about it. They don't have to live in the 3rd District to review this. We've been surprised at the traffic that has come in for some of these webinars, not just around the state, but even around the country, as they're trying to get more information and figure out what to do. But just know that my office is here. I'm here to work to help people get through this. This is an incredible challenge that we have been thrown. This is an incredible time in our country. And it's been amazing to see Americans rise to this occasion, to socially distance, to stay home from work when they can, for people who are stepping up to work where they have to. And we are so grateful to every American for taking the steps that they're taking. We clearly have flattened the curve. We have gotten control of this, and here in Texas, we're opening up slowly but surely. And I hear more good news economically, but there's still a lot of pain, a lot of issues, a lot of problems. We're here to help with those. Feel free to reach out to my office anytime. And I continue to be working morning, noon, and night and through the weekend to try to help everybody in the 3rd District get through this in the best possible position. This is a great challenge. I'm incredibly proud to have the opportunity to represent you in the U.S. House of Representatives. I'm grateful for all of you for taking the time to be here. These are important issues and important information. Ted, thank you for your presentation. And with that, I want to say thank you and God bless Texas.